political unrest and sort of pressure points even in bigger economies, more advanced developing economies, such as Brazil. Obviously, we saw what happened earlier this month. So how concerned are you that these pressures will spread to sort of middle-income emerging market nations?
Well, thank you. Thank you for the invitation to be this panel. It is a very good company. But let me start by saying that there are middle-income countries with problems. I mean, the World Bank will clearly point that out. I mean, perhaps a lower proportion than low-income countries, but there are several middle-income countries, and the middle-income countries are also facing, at least two other issues. The first one is the issue that Ken already mentioned, the higher interest rates, which actually last year with also risk margins were very high. So the availability of financing came down significantly. So even the refinancing of debt has become more difficult and more costly, let's say. So the issue of financing continues to be quite important on top, let's say, of debt. So I think that's a first point that I want to make. I mean, whether and then, of course, we can talk later about the things that have already been mentioned about the difficulty of the current context in terms of the institutions and what sort of institutions change or short-term solution we will need. But let me perhaps point out in that regard that there is only, strictly speaking, only one framework, which is the common framework for debt treatment for low-income countries, and very few countries have used it. And then even in those countries, even the debt restructuring mechanism or debt suspension initiative that was adopted before that, very few private creditors participated. So there's a huge institutional lack of lack of institutional arrangements to manage debt issues. I want to now. I mean, one of the problems of high debts for countries is, of course, that the fiscal space that countries have are much more limited than in the past. Even if, for example, in my country, which is probably not a country that needs any restructuring, but we do have high levels of debt by historical standards.
56?
Huh?
56%?
Yeah, it's 50, a bit more than, our target is 55%, and we are 2 or 3 percentage points, depending on the month, above that target. So we do have high levels of debt, and that reduces the fiscal space. So perhaps in answer to your question, when you have civil unrest and you have to respond to it, you may have limitations in terms of your capacity, your fiscal capacity to respond. And that's certainly a constraint, as generally a broader constraint on the resources that you have for active social policies.
Great. Okay, so I want to turn to the Shadow Chancellor. So the UK was in the news. I mean, Professor Rogoff mentioned it, obviously, and to a certain extent, you can say we saw the return of kind of bond vigilantes in a way, sort of markets that they saw that they punished for being governments that they punished for seeing as fiscally unwise. So in the UK faced this, basically pushing up borrowing costs, to uncomfortable levels. Maybe you can talk a little bit about the UK situation, but in general, do you think we've reached some sort of a turning point between investors and government?
I think there's clearly more focus on debt, and the borrowing costs are going up globally, as Ken's already set out. But I wouldn't blame the bond vigilantes for what happened in the UK last September. It was the fault of the government, who announced £45 billion of unfunded tax cuts, and then went on the television and said there's more to come, with no plan of how to grow the economy or how you would finance those cuts and those tax cuts. And what you saw was, in pretty short order, robust market response. So the pound fell by 10% against the dollar to close to parity. Borrowing costs for the government increased by 10%. Mortgage costs, which are hugely important in the UK because most people have short-term 2-year or 5-year mortgages. 4 million households in Britain this year will be renewing a mortgage, and so mortgage costs have a huge impact on domestic demand. And 40% of mortgage products were just withdrawn in a matter of a few days because mortgage companies didn't know how to price that mortgage lending. And then, as Ken mentioned, we had the problem, which I think absolutely no one, I don't think, foresaw, of liability-driven investments that pension funds were investing in that were highly leveraged and highly invested in government bonds. And as the value of those bonds fell, the collateral calls came in, which meant the bonds had to be sold, which then put further downward pressure on bond prices. And the Bank of England, who had just announced that they were going to embark on quantitative tightening, had to step in with a big package of liquidity for the pension funds to use. So it looked like you had, the government with the foot on the accelerator with these tax cuts, the Bank of England tightening policy, both with quantitative tightening and increases in interest rates, but then being forced in this position of having to offer further liquidity. Just a couple of other things I'd say about the situation the UK got in. I don't think it was just the decisions to cut taxes. It was the sort of the run-up to that so-called mini-budget on September the 23rd. And I think this is really important in terms of lessons for others as well. Economic institutions are incredibly important, and undermining those institutions that give investors confidence is very dangerous. So in the run-up to that mini-budget, we had a leadership contest in the Conservative Party, the governing party, over the summer, where there was undermining of the central bank, of the Bank of England. You then had the new chancellor coming in, and the UK had 4 chancellors last year. But the new chancellor, Kwasi Kwarteng, came in September, and one of his first acts was to sack the respected permanent secretary at the Treasury. And then with that mini-budget on the 23rd of September, when you should have had a forecast both for the economy and for government finances from the Office for Budget Responsibility, that wasn't allowed to be published even though it was available, which just gave this impression that the government had something to hide and wasn't operating within the frameworks that had existed in the UK in terms of the Bank of England since 1998 and in terms of the Office of Budget Responsibility since 2010. And those things combined with the huge unfunded nature of the tax cuts got, we're not a low-income country, we're not a middle-income country, we're in the G7, and we got into huge difficulties. And I think that is a lesson for any country that wants to embark on those sorts of policies without explaining. And I'd say, as how I started, not the bond vigilantes' fault. Investors looked at the UK, and the governor of the Bank of England said last week, Andrew Bailey said last week, that there's still a hangover effect from what happened in September, with question marks being put over the UK as a place to invest. Now, look, I'm the opposition party. I want to turn that around, maybe come on to a bit of that, but that's what happened to the UK in September.
Indeed. I mean, I think the markets, that was... I was trying to be a bit more diplomatic, but, the Shadow Chancellor here, I think, you said it as you think it, but, clearly the markets punished the government. There's no... And if I could just to push you a little bit more, because, of course, markets recovered, but, the UK economy is still lagging, and worries about growth are leading a lot of investors to limit their holdings. This is both of the pound and of British debt. And so, can you give us a sense of how your government, your party, if in government, would fix things?
So the first thing, and the lesson from September, is that any economic policy has to be built on a rock of economic and fiscal responsibility, and that has to come before anything else. But it's also obvious, and you make this point, that the UK needs a serious plan for economic growth, because in productivity and in growth terms, and numbers that were published today about foreign direct investment, shows that the UK has been missing out the last decade or so compared to our nearest neighbours and our competitors as well. And look, the reason that Keir Starmer, the leader of the opposition in the UK, and myself are here this week is to send a message that, you know, at the next election, where at the moment Labour have a strong lead in the opinion polls, that the British economy will be open for business again. We want to work with business and partner with business to get that growth and productivity back in the UK economy. You know, part of that is sorting out some of the mess of the Brexit deal of a couple of years ago, which has seen our exports fall and jobs move abroad in many cases. It's the Green Prosperity Plan that Keir and I have been setting out, because the UK's got every reason to think that we could be leaders in some of these industries of the future, our great universities, our industrial heritage, our geography. But at the moment, we're falling behind both the US and, of course, the announcement this week by Ursula von der Leyen to the EU as well, when it comes to supporting investment in those green industries of the future. But an incoming Labour government wants to work in partnership with business to secure the investment, the jobs that is needed to turn around the poor economic performance, you know, not just since the Brexit vote in 2016, but really now for just over a decade.
Okay, so that's why the Labour Party, you are here in Davos as part of that effort.
That's why we are here, because, you know, somebody has got to be an ambassador for Britain, and the Prime Minister and Chancellor of my country are not here. Labour hope to form the next government, and so we think it's really important to be here talking to business and investors about our plans for the future.
Thank you. Professor Rogoff, let's talk about quantitative tightening just a little bit and how it fits in this equation and the impact that it'll have this year. You know, central banks obviously have had a huge presence over the past year in the world's biggest bond markets, and basically tightening policy at the same time the bond sales were rising. And all of this is adding to sort of upward pressure on borrowing costs. I mean, what does this all add up to debt sustainability? You know, what are the vulnerabilities here?
Let me start by seconding, you made many important points, but one in particular about central bank independence. And I think whatever was true 40 years ago, in this day and age, undermining central bank independence is suicide. That's been an incredibly effective device for giving confidence in so many ways, not just with the inflation rate, but I'd almost say with institutional integrity. And it's, I think it's a mistake to try to attack central banks. And you know, Turkey has fired more central bank ministers. Well, maybe the same number, shout out, as chancellors in the UK.
It's not a competition we want to be in, really.
No, but
Competitive.
so quantitative tightening is particularly significant in the Eurozone. So if I can talk about that, where the quantitative easing had a very important element to where the European Central Bank is the most important Euro-wide institution, or it was at one time, and it has the fiscal capacity to do big things quickly. And I think it did a lot to prop up periphery southern country debt during the crisis. But it sold it on the idea that we're fighting deflation and we have to raise prices. And I don't think they'd really thought that, but it sold that way. So it's very hard in this other direction where interest rates are going up, and Italy's interest rates seem to go up you know, more than proportionally to how much Germany's interest rates go up. And it's clear that if you just pulled the rug out from under this, Italy's rates would go up a lot more. And I think the ECB's done a very good job in trying the communications of this tightrope, but it's very hard. So they say they have another way of doing it, and we'll see. But I think elsewhere it's not such a big deal, except in Japan, where they did a much more extreme policy, where many of you may know they fixed not just the policy rate, as the Fed does and many other central banks. They fixed the 10-year rate. Now, that worked when interest rates seemed like they really ought to be negative in Japan, and so people accepted it. But now that there's upward pressure on real rates, which I already mentioned, and inflation everywhere, even Japan, that really is hard for them to back out of.
It's been in the news just over the past few days a lot what's been happening in Japan. I wanted to come back to China because you had mentioned it just in your remarks before. So I think in December, China, which of course is the largest sovereign debt creditor, agreed with the IMF to participate in a global sovereign debt roundtable. About debt release, other solutions. What role does China play then in everything we've been talking about? What should they do? What should China take up sort of the mantle to do?
Well, I think we need to keep this in a perspective. We are in a transition period where, we were in a paradigm that you deal with the Paris Club, the traditional creditors, the multilateral creditors, and this has now been changing. So also in the previous workout, non-Paris Club creditors didn't play a significant role. Now they are playing a very significant role, and that is, I think, the challenge to bring these creditors into this process of dialogue. And it is not only China, India is an important creditor, Saudi Arabia, some of the Arab states in this country, and they need all to be in there. And this has been challenging. And I think that was also a fundamental idea of the common framework of how you think differently of this. And in the last, I would say, 2 years, we have seen limitations of the common framework. The common framework is actually extremely important to bring everybody around, but it has been also very difficult and challenging to get them to the agreements that are necessary, and also on a timely basis. So at the 6+1, this is a meeting that the Prime Minister of China, Li Keqiang, does with 6 international organizations, including the IMF and the World Bank. We agreed to have this roundtable that is co-chaired by the IMF, the World Bank, and then the G20 presidency. So that is in this year India. And we will start at the deputies level, a first discussion next month at the G20 meeting in India, and then probably in April or May with the finance ministers. And really it is about fostering the dialogue, first of all what needs to be done, and then actually see how we can help these countries work out. Because it's very clear, take also a case of Sri Lanka. The problem is that there is not a debt workout right now. And the country desperately needs a lot of financing, and that is not assured. So that is why it is urgent. I would actually say one last reflection, maybe also with the common framework, as I had done the HIPC initiative with the IMF, what we did in the mid-90s was come up with a framework what that sustainability means. And you can criticize whether there's NPV debt to exports or the debt service ratios were all the right ones, but it was a very clear spelled out process that you use first, the Paris Club process, you exhaust it, it's not necessary, we need to do additional things. Right now we have negotiations where there is not an established debt sustainability framework. So what you see in the discussions in the that different creditors are challenging all the underlying assumptions, or is this really sustainable? Take the case of Chad. Now, of course, then, are you looking at that sustainability today, or are you projected it in the future? How long in the future? And this has been very complicated. In addition, we need to think about that in many of these frameworks earlier, we were only looking at external debt, And domestic debt has also become important. So this is a very overdue discussion that will need to be held. I hope also that you get first on the political things, that we need to tackle those countries that are in desperate need for treatment. And then we will also, in parallel, start having this discussion of a much, much clearer framework against which we then can define the level of debt relief.
I mean, just all of you, I mean, is there a compelling case for a major new round of debt relief? I don't know if anybody.
No, for institutions. Can I talk about that?
Absolutely, and then I have another question for you. But is there a compelling case?
I think you go case by case.
Yeah. Well, no, the situation is case by case in any case. But the lack of institutions for debt renegotiations is a major institutional problem in the world economy. I mean, all the solutions have been ad hoc. The Brady Plan, the debt relief for poor countries, now this common framework, they are ad hoc. We do need an institution, a permanent way of managing these issues.
So an international debt fund,
Yeah,
or an debt organization.
Yeah, no, well, it could be the IMF as it was tried in the early part of the century. It could be the IMF, it could be the United Nations institution, but we need an institutional framework where these issues can be handled. And of course, I mean, the issue of let's say the levels of debt and when they are risky, let's say, which is the good work that done by the World Bank and the IMF, is of course was a step forward. But again, that should be a framework for something else that is missing in the world institution. Let me stop that for the time being. But
Good, because I want to ask you something else, which is several countries in Latin America have, including Colombia and Argentina, Ecuador, have proposed debt swaps in order to meet climate goals. And your government has as well, and basically under this scheme, developing countries basically get their debts canceled or reduced in exchange for sort of commitments that they will then finance green projects. And I think you have suggested it for the Amazon. Can you give us an update on how that is proceeding?
well, let me separate the issue of debt relief and debt restructuring from debt for
Of course,
debt for
they're two
nature
different, but it's an
swaps.
interesting, absolutely, but it is an
The debt for
interesting.
nature swaps or debt for climate swaps was an institution of the climate change negotiations, not of the debt issues.
Okay.
And I think it makes all sense, it major sense to enhance significantly. And this, by the way, has to do with one basic fact, is that if you want to point out one major issue of inequality in the world is the contribution to climate change. It's all the responsibility of major responsibilities from developed countries. So developed countries should actually support in a significant way, the climate change mitigation and climate change adaptation, which is a major problem. And the debt for nature, debt for climate swaps is one mechanism among many others that should be part of that solution, together with the $100 million that were promised as a contribution for the debt restructuring for climate change mitigation in developing countries, which has not been met. I think that's don't mix them.
Okay.
Don't mix them. I think we're talking about debt in more general, not for debt for nature swaps, which is a climate change.
But it's a topic here, so it's an interesting proposal. So that's why I wanted to see where you were with that.
No. Many countries have used it
Yeah.
in the past, including Colombia, and it should be more widely used. In any case, for example, for our country, it's a small thing relative to our debt. It's very small, but it can be a major contribution to our fight against climate change.
Professor Rogoff wanted to jump in.
Well, two quick things. First, you asked the question about HIPC initiative. That's when the debts were written down. And there is a big problem today with the presence of China as a creditor. It just has to be a part of it. If China doesn't want it, then it can't happen. I don't want to get into it here, but I'm all in favor of giving developing economies aid. I have a proposal for a World Carbon Bank to channel technical expertise and funds to developing economies to take up another time. But debt for nature swaps I don't favor. I think actually they sound much better on paper than if you look at them closely. Each case is different, but it was the front page of Time, the cover of Time magazine in 1988, and it was, I think, by and large, they're giveaways to the creditors.
Yes.
Minister,
did you want to rebut that?
No,
Give you a chance.
it's a good point. I mean, when they do...
This is where the economist in you and the minister in you sort of...
No, when they do give you money for climate change mitigation or adaptation, it is a useful instrument. For example, if, let's take now this major South American initiative, which is to preserve the Amazon, which is, I guess, the largest remaining jungle in the world, which is a major source of climate change mitigation. So I think it's a world responsibility to support the Amazon. So it's not a South American initiative. And if the mechanism, I mean, if they want to do donations straight, fine, that would be
You'll
great.
take them.
I will probably, we'll celebrate, but that for nature, debt for climate, is equally good.
Would you swap that, like 10% of the Amazon in Colombia, that is done by a foreign country?
No. Don't. I will not give a centimeter of the Amazon to any foreign country. I mean, for sure. No, what
I've opened up a whole can of Amazonian worms here. Goodness gracious.
No. But I mean, let's put it this way: the deforestation, which is a major problem of the Amazon, and is the major contribution of Latin America, certainly of my country, to climate change, is an objective that should be promoted. And then how that is financed is an important issue.
Professor Rogoff, then I want to go to Shadow Chancellor and 5 minutes for questions.
Super quick, but giving money to Colombia to preserve the Amazon, great idea. Debt for nature swaps, the problem is that the debt that doesn't get taken away gets bid up in value. That's been the problem. So you're giving money to all the people who didn't swap their debt.
Transfers are better, yes.
Okay, all right. The minister will be outside accepting donations after this panel. Shadow Chancellor, since I was going to use another example like NHS or education or whatever, but I'll use climate energy transition, which is what are the implications, right, of a debt mountain, for pressing priorities that any government has, that your government would have, including for energy transition projects?
Yeah, well, look, I think that investors can see the difference between unfunded tax cuts and investment in infrastructure that yields a long-term return. But obviously what happened in September in the UK does make it harder to make that case. But the UK, like other countries around the world, have to play their part. And it's all well and good preaching and lecturing other countries what they must do around the world, but we've got to get our own house in order. And of course, to meet the climate emergency, which is a moral obligation, but also in the UK because it is the way to grow the economy. The jobs of the future in those industries, carbon capture, green hydrogen, etc., that is where future jobs and prosperity is going to come from. But what you're seeing in countries around the world that are taking this seriously is through a partnership with government and business. But the other thing I would say, this is just not just about money. Every business that I speak to who wants to invest says you've got to sort out the planning, you've got to sort out the regulation, you've got to sort out the grid connections. The role of government isn't just to provide money, it's also to provide the framework, the long-term stability to encourage that investment. But I think that investors and everyone can see the difference between short-term sugar rush plans for growth and the long-term investment that is needed to kickstart industries and the economy.
Great. Okay, we have about 5 minutes for questions. Please.
Hello, Hiron Ishimura from Japan's Nikkei. Professor Rogoff, you mentioned Japan several times, so I must ask this. So should Bank of Japan abandon its yield curve control policy? And what will happen if it does abandon its policy? And is Japan's high public debt level adding or feeling upward pressure on interest rates? Or will that happen? Thank you.
Try to make a careful answer to this to not cause a crash in the yen. So it makes sense to try to, at this point, to try to keep it going as long as you can, because the exit's not going to be pretty if there does have to be a dramatic exit. As far as Japan's debt, which is 260% of GDP, about half of which is basically one-day debt, I mean, I think it's manageable. It sounds infinite, but I think it's manageable. There may be some inflation. But the problem is when your debt's that high, you don't necessarily have a lot of fiscal space, we heard that earlier, to deal with anything else. So if a problem arose because there's a UK-type pension, the pension-type problem buried somewhere in the financial system that nobody knew, then there's less resources to wrap around that. That's really the risk of having such a high debt. But you know, saying Japanese interest rates would go up is famously called the widowmaker trade. So I'm aware of that.
Minister, did you want to add anything on this? You said you want to talk about the...
No.
You were not going to talk about this, are you? Okay, yes, please.
Let's say South African Reserve Bank. I think to the World Bank, I mean, in the resolution of this debt, how do you think the private sector debt, particularly domestic debt, should be handled? Because there are complications that would tend to be held by pension funds and insurance companies. And my hunch is that you can't discriminate against the foreign holders of that debt. And what have you seen? What do you think should be done?
Let's get this question as well, so then we can answer and close. Yes.
Thank
Please.
you, Fernando Ghosh, Council on Energy, Environment and Water, and member of the UN Committee for Development Policy and an advisor to the Indian G20 presidency. A quick question about climate-related macroeconomic shocks that are only going to grow over the years. Now, even if a country, of a low-income or middle-income country, were being responsible with their debt, this is an externally imposed constraint. It's not just a fiscal constraint. It just completely messes up their macroeconomic situation. What would Professor Rogoff or Jose Antonio Campo recommend as a way to create an insurance cushion for that kind of vulnerability?
Great. Well, first to you for the first question, and then you can both jump in on the second.
Well, on the first question, I think that we are seeing that there is not an agreed framework of a debt workout that involves equally the domestic debt and the external debt. And what we are seeing is that there are huge sensitivities, particularly when you have incipient pension funds. I think what is being tried, and that is usually with the IMF programs, that one tries to have an orderly workout in the domestic one. But the domestic debt, we need also to say there can be central banks, there can be institutional investors. There is also with business. So one needs to see what is the type of debt, and particularly when local business has to accept a huge haircut, what that actually means for the local economy. So those things will need all to be evaluated. On the external debt, I think there are the collection action clauses that need more use, but also I think quite frankly that we have to say within a framework how you can enforce action, and this has to be debated. What you saw with the DSSI, the debt service suspension initiative, it was all voluntary, and that voluntary participation didn't work well. And so one needs to discuss how we want in the future to have those kind of workouts. But just to concretely take in the Zambia case, but also this is going to come up in Sri Lanka. If all these debtors don't want to act on this. We need to have a serious discussion about the lending of arrears by multilateral institutions. And we have been now doing that now for some time in Zambia, and we're very loud on this. Zambia will need critical financing, but I would then say, run arrears.
Okay, we need to quickly, because we need to close. Minister, and then Professor Van.
No, on this issue, certainly, actually in the most recent international, discussions on the issue of, let's say, climate change crisis, I think this issue of there are all issues like, for example, the Caribbean, which has already been subject to a lot of risk associated, to hurricanes. That's one issue. But more recently, the issue of a specific, climate crisis, floods, for example, like Pakistan last year, or even my country, which has a significant floods associated to climate change. I think the world economy should create an instrument, a kind of insurance mechanism for those cases, which more or less was a point in the negotiations in the climate change in Egypt, in the COP. So I think there has to be created, but I think it's a parallel mechanism, not necessarily associated. It's actually to be able to fund the cost of managing those specific crises. So it's kind of more as an insurance mechanism that the world lacks today. I think different from debt as such.
And last word.
I mean, I think there are places that are going to become very difficult to live because you can't get insurance. That's already true in parts of the United States. And for small island states, there's nowhere to move. And it's a huge problem. And I'm not sure that any amount of money really is going to solve that. There are going to need to be adjustments. I mean, that's part of climate change, all these places that people suddenly have to move. And as Al Gore has said, having all the climate refugees, that's just a piece of it.
Shadow Chancellor, I didn't give you a last word. Did you have a 5-second last remark?
I mean, even in the UK, we are seeing the impact of climate change with much more flooding, including my own constituency, which we'd never seen before. And obviously the problems in some of the developing parts of the world are even greater. And we have to come together as a global community to address these challenges.
Wonderful. All right. Well, thank you very much to the panelists. Sorry for running a few minutes over. And thank you to everyone for listening. you.